Dzień dobry, Szanowni Państwo.
Welcome, ladies and gentlemen. My name is Magda Popaczewska, and I'm responsible for investment relations in LPP. And today, I have pleasure to welcome you to our video conference, which is devoted to the financial results for the previous year. It is untypical. It's a 13-month-long year and a very historic one. On our video conference, we will also discuss our preliminary results for the first quarter of this year, and also it is also untypical because of the COVID influence, and we will also discuss our plans and the challenges facing us this year. Before we start, let me introduce the Vice President of the Management Board, Mr. Przemysław Lutkiewicz, who will present in details the results. As usual, the second part of the conference will be focused on the Q&A session. And right now, we encourage you to ask the questions during the conference via chat. That's all from me. And let me give the floor to Przemek. Thank you very much. Welcome, ladies and gentlemen, on this conference devoted to LPP results for the fourth quarter of 2019. We will discuss the financial results, and as Magda said, this is historic results. We will try to do it quickly because you will probably focus more on the preliminary results on the first quarter and our plans for the months to come. Summarizing 2019, we've been operating on 25 markets with offline stores and on the 30 markets with online. We have 1,400 stores, and like-for-likes were positive. As a result, adding the online sales, the wholesale was increased by 13%. Take a look at the map here. Let me explain the legend. The green areas, we marked here the online and offline stores. The grey areas, we marked only the countries where the traditional stores are present, and the blue countries are with the online presence. Additionally, we added the information that is probably most interesting to you, how many countries is under lockdown. If you see here in Russia, our very important market, the first foreign market apart from Poland, Russia, Romania, these markets at the moment, there is a lockdown on stores. Our flagship store is also not in operation in London. As we informed previously, we've been involved in very hard negotiations about decreasing rent levels with the malls. So in Poland, not all stores are in operation in shopping malls. Here you can see also how many stores are open. Almost 800 stores are in operations out of the 1,746 in total. Before I move to the financial results, let me remind you a very important issue. Magda mentioned that, but let me just stress it clearly. 2019 was a 13-month-long year. It started on the 1st of January 2019 and finished at the beginning of January of 2020. So the fourth quarter that we're discussing today is also an untypical one. It's a 4-month-long, from October until the end of January 2020. Showing these data, we try to give you the most proper overview of the whole information. So we showed the base of the comparable 4-month period of the previous year. I would also like to stress we are now changing this fiscal year. 2020 will be the standard 12-month year, but it started in February, it will finish in January 2021. In order for you to have a better overview of the situation and could work on the base data, we will provide you with comparable data, so data for the quarters of the previous year in this shifted module from February to January. At the end, in the backup of the presentation, in the backup slides, you will also find a chart with the preliminary profit and loss account according to the changed quarters. Let's move to the sales results. As you can see on the left, the whole year, the whole period covered in this slide, we had positive like-for-likes of the fourth quarter as well, 1.4% of growth, and the most growing like-for-likes in such brands as Mojito, House, and Sinsay. On the right, you can see dynamic growth of online sales. Here we try to present the lighter color, the fourth quarter of 2018, the 4-month long, and the current one, the fourth month period of the fourth quarter of this year. So a growth of over 50%. What is important, in the fourth quarter, the online sales constituted nearly 15% of the total sales. Let's have a look at sales by brands. Sinsay and the e-commerce have recorded the highest growth of over 50%. Sinsay, because of the dynamic floor space growth, this is reflected in this chart on the right. We are very pleased that all our brands recorded growth. What is commendable is Mojito brand, which after, well, let's say weak quarters, may consider this quarter as successful. The increase in sales is more than floor space increase. Let's discuss now the regions. In Poland, 4% growth, and as you can see, the foreign markets have been noting increasing growth. As we mentioned in the previous quarters, also in the fourth quarter, the foreign sales exceeded the domestic ones. Overall, quarter to quarter, fourth quarter, comparable to the fourth quarter of the previous year, increased by nearly 14%. On the left in the chart, you can see the growth division into e-commerce, retail, and other sales outlets. I'm wondering what it would look like in the next conference, how this chart will look like. The e-commerce share will definitely be more. On the right in the chart, you can see the revenues per square meter. We've been building a larger store, so the growth on sales growth is decreasing because of the rents. If you compare Poland and Europe, there's several percent decrease per square meter, but in the Eastern markets, the growth per square meter is increasing. Overall, if you have a look on the bottom here, LPP Group, including the online sales, we had the flat sales. Here we have the total of online sales and traditional sales per square meters. Let's move on to gross profit margin. On the left, you can see the seasonality of our margin. The fourth quarter, it seems it's lower than in the fourth quarter of the previous year, only because the fourth quarter is the 4-month-long one. And January is added here. In January, this is the sales offers time, so January significantly affects our gross profit margin. On the right-hand side, we compare year on year. And here, as you could see, in the 4th-month quarter is identical. Let's have a look at costs on the left. The chart with the costs shows the 5% decreased year on year. And all the elements, all the particulars are falling. Rents are lower. Personnel costs and the so-called other costs are also lower. On the right, the chart shows the overall costs per square meter, and we have the increase by 2%. This increase is the result of a very dynamic e-commerce growth and the resultant costs connected with logistics. Financial results for the fourth quarter now. In the first two lines, you can see the fourth enlarged quarter according to IAS 17 in order to compare the dynamics year on year. And the reported results, the IFRS 16, which is obligatory since the 2019, this actually presents the full report. So we have the increase in revenues by 14% to 3 billion zlotys. Similar level is the margin level, but the costs increase higher by 15% year on year. Therefore, the operating profit increases to 400 million zloty, 8% year on year. Net profit at the bottom, according to IFRS 16, 310 for the quarter. The whole 13 months accumulatively of 2009, you can see almost 10 billion zloty. It's an increase of 30% year on year. Margin is year on year is a bit lower. The positive aspect is that the costs are increasing at a lower pace, 10%. Therefore, the operating profit is increasing 17%, and it was over 800 million zlotys. Net profit in the IFRS 16 is 421 million zlotys. Let's now discuss inventory. At the end of the fourth quarter, at the end of January 2020, we recorded over billion zlotys inventory. It's 1,570 zlotys. It's a quite good result for us, and I'm mentioning this because there's been a lot of changes in terms of inventory management strategy. We've increased this inventory exchange, so the spring and summer intakes were quicker, so that from February we are able to provide new collections to the stores. Also, since they have been developing very fast, the inventory intake is higher. E-commerce is also on the increase, so we need to ensure the appropriate level of inventory. It's not to be counted in square meters, obviously. Therefore, this ratio, 1,500, 1,600, this is the optimum ratio for us. On the right, you can see the working capital. The long-term goal that we set for ourselves, matching liabilities to inventory level, for several quarters has been achieved, and the fourth quarter was the same of the last year. So the trade liabilities were higher than our inventory. And now let's move to net cash. As at the end of the year, the company was not in debt, so net cash was nearly 800 million zlotys. Let me remind you that at the end of the year, we issued bonds worth 300 million zlotys. On the right, you can see in the chart the capex. The fourth quarter, as usual, this is the highest number of expenditure. This time it was the same. Capex for the fourth quarter, 436 million. So the capex this year is lower by 17%. Summing up the past year, we could say that it was a good year. The foreign sales exceeded domestic ones because of the increased development abroad. Double-digit online sales growth was recorded, and that we've had control of costable stores and a good financial situation in terms of 2020. 2020 surprised everyone. It's been a big black swan which appeared in February and drastically changed the situation in many industries, including the retail clothing industry. Recently, we've given you some results for the first quarter. Let me discuss them briefly now. Revenues was lower year on year. It's the quarter from February to April by 1/3. The gross profit margin by 6%. Because of the online sales offers that have been going on, it's impossible to have the costs dropping at the same time because most of them are fixed costs. So it's only 9% drop of SG&A costs. So instead of we had a large loss at the end as a result of that. Looking at the situation of the first quarter, as you remember, in February and March, till the half of March, most of the stores were open, but afterwards, throughout March and April, there was lockdown on stores. Here in the slide, you can see the 4 months of this financial year, starting from February until the 3rd weeks of May. The lower green line shows the growth dynamics in traditional stores, where in February we noted 10% increase, and in March a drop by 42%, 100%, practically no sale in April due to lockdown throughout Europe. And in May, where particular countries start to go back to normal in terms of their trade policy, for the 3 weeks of May, we recorded 84% decrease year on year in traditional stores. What is positive in this situation is the green line, the e-commerce sale. Very good results recorded already in February and March, 72 and 62%. And given the lockdown on traditional stores, we have recorded an increase in online sales. 250% increase in April. And what is encouraging, 381% increase in May, despite the fact that the stores are being opened again. This is a signal to us that, first and foremost, our product is well known and our brands are well known and they sell well. And the second thing, customers have been changing their customer habits and their preferences. They start to move online. It seems that this dynamics will be maintained in the coming months, taking into consideration that it's more difficult to ensure safety and compliance with procedures in traditional stores to make the customers feel safe entering the stores. The column in the middle shows how lower sales we have year on year. In April, almost minus 70% drop in sales and minus 43% for the 3 weeks of May. It's worth emphasizing this online dynamics and also the fact that during the pandemic, while the quarantine was on and we were locked down in our homes, everything worked well and we've been doing our utmost to increase online sales. This is discussed in the following slide. So a lot of initiatives and actions taken in the e-commerce area so as to have the most sales. E-commerce remains the only channel for us once the shops were under lockdown. We've been doing a lot to sell as much as possible. So adjusting, streamlining our apps and websites in terms of mobile in particular to the needs of the customers. More outlays on marketing and attracting new customers. There are a lot of offers. I call them smart offers. They increase the traffic and interest, but they do not have a negative effect on our margin. The most important thing I would like to add, given such high sales results, no company, or it's difficult for companies to move to this mode, changes in the logistics We've been successful in that area because we believe that only in flexible, dynamic companies may actually survive in these difficult times. So very quickly, we have transformed our logistics procedures, and our most important logistics center in Pruszcz Gdański, we have kind of transitioned to e-commerce and changed its model. So increase our shipment possibilities, and during these times, this is key for the customer. By 300, 400 increase, so four times increase in sales. From the logistics perspectives, we have managed to ensure fast delivery of the goods to the customers. Additionally, our logistics centers in Romania, in Slovakia and Russia, they also support the local market, so the pace is ensured. Two following slides discuss costs. As you know perfectly well, our two categories, the base categories of costs are rentals and personnel costs. Rentals are the key elements of our costs. And taking into consideration of what happened, or the lockdown that happened, the changes in the customer habits in terms of visiting stores even after the lockdown was shifted, everything suggests that trade in general has changed considerably. We don't know how much it has changed and what the ultimate model after COVID will be. But as of today, we know that traditional stores will not be visited as frequently as it was before. This is reflected in the e-commerce statistics. Very intensive dynamics of online sales indicates that traditional stores will be in trouble. Looking into the future, we decided that we cannot leave the rental levels at the same results. We've been in very strong negotiations with the malls in order to have them have rentals dependent on the turnover, on the sales. We are very keen on sharing this with shopping malls, but if we note the drop in sales, it's impossible for us to pay as high rents as in the past. As we announced, I would like to mention that as well. Given the 30% of our floor space, we decided to start negotiations on new terms of rentals for our stores. You will definitely ask this question, so let me just give you a head start. As you can see in the slide, 1/3 of the stores where we terminated the contracts have actually managed to change the terms of rentals. In others, we've been in hard negotiations, and the negotiations will continue for some time. To summarize this, there is a risk, and we are taking this risk into account as to the opening of stores. Some stores will never reopen, but we believe that some agreement may be achieved with the shopping malls, and in this difficult situation, we may come to some agreement. But let me emphasize one more fact. The changes in customer habits, less frequent visits in stores observed right now, means that we cannot pay as high rents as before. Because of the changing situations, we also decided to adapt our development plans. Many development plans for this year, we moved to the next year, hoping that it will be back to normal and the development will be possible. The North Macedonia opening is obviously also moved to 2021. Importantly, this year we have decreased our development plans to 8%, and the majority have been actually achieved in the first quarter. For the second quarter, we have openings in Russia in particular planned. An important element of the new strategy, or strategy for improving the financial liquidity and long-term survival of the company, is renegotiation of the rents for the rental spaces. Another important element is personnel cost. Very difficult decisions but decisions which are necessary in order for the company to operate in a long-term perspective. First of all, decreasing the salaries in Poland and abroad alike, in our companies abroad. The management board resigned from their salaries for the pandemic time. Also, the supervisory board members resigned from their salaries for the time of the pandemic. In Poland, the average decrease in salaries in stores, in headquarters, it's 20%, and we've introduced some levels depending on the levels of salary, from 10% up to 30% of cuts. We've been also benefiting from the government support, the so-called demurrage and solidarity, also abroad. Where it's possible, the companies have been applying for government help. It's very diverse. Some countries give 40% subsidy to salaries. The most generous are such countries as UK, Germany, or the Czech Republic. But there are also countries that do not provide any help. These, on our markets, these include Russia, Ukraine, and Hungary. Taking into consideration the funds, the subsidies obtained, we've got 22 million zloty, and a similar amount we obtained from the governments of other European countries. Summing up all these actions, we've been discussing several aspects. Revenues post-lockdown. The only source was e-commerce, and we have done our utmost to increase this online dynamics. In the previous years, our priority was 50 or 100% growth. Today, we said, why to limit ourselves? Why not 200? Why not 300 dynamic growth? Let's do it as high as possible, but maintaining this smart pricing policy so as not to disturb the margin. And this policy seems to be paying off. The margins are at reasonable levels. The second aspect is the cost of stores, cost of headquarters in all aspects. We've been trying to introduce some savings and expenditures related to capex on infrastructure on the stores. Here we decreased as much as possible. We have stopped several investment projects. We decreased the orders for the second part of the year, but as management board, we recommended to the supervisory board that dividend is not paid out. All these actions aim at maintaining the company, maintaining the good financial standing of the company for us to survive this difficult COVID times. What about the plans? They're limited. It's very difficult to predict what will happen. The weeks that have been past us show that the customers will pay attention to affordable clothing. The cheapest brands have recorded the best results in sales. The customers will be more selective and probably focus more online rather than in traditional stores. What we've seen is like the universal fashion is selling better, rather homeware oriented. When it comes to home, many people have changed their work mode into home office. So we've been observing the trends in terms of shopping for clothes. Leisure, homeware clothing is preferable for the customers. We've also seen the influence of new environmental trends on the choices of our customers. Therefore, more eco-aware collections are present in our stores. On the right, you can see the medium price range for one piece in particular brands. These are not very high prices. It seems that, given the situation, we are positioned well as a company, so as to be in a good standing after these difficult times and to sell well. Online sales is very important, but we do not believe that 100% of trade will move to internet. We believe in omnichannel, so combining both channels of distributions. We will probably not need as many stores. We would need to optimize the traditional store chain, but it's worth emphasizing that we will be combining the two models, the e-commerce and traditional stores. We'll focus on RFID technology, this electronic tag, and continue to streamline the shopping in both channels. Click and collect option, or buying in stores and have a delivery to our place of residence. Does it mean stopping the development of traditional stores? No, but it will look differently. It will be quality-based. We will demand more fit-outs, more subsidies to creating our stores. We want the rent to be based on, be variable, not fixed. Looking into the future, it seems that most of this development will be generated abroad. Let's have a look at online sales growth. For the 13-month last year, it exceeded strongly over billion zloty. The target for this year is exceeding 2 billion zloty. And looking at the dynamics of the previous months, it seems that it's quite realistic. In the traditional stores, on the other hand, we limited our plans to 8%. In the bottom line, you see the breakdown by region. Poland is 2% year on year, 10% in Europe, 15% in CIS countries. So Eastern countries remain important to us. Despite the difficult situation in Russia and a continuing lockdown in Russia, we believe that pandemic will be overcome also in that region. And looking at the results so far, they encourage us to continue our investments. But as I would like to emphasize again on positive terms. 8% increase in floor space. Most of this has been already achieved in the first half. For the second, we will have only a few stores to open. When it comes to CAPEX, we lowered it again. This year, only 400 million zloty will be devoted on new investments, mostly in stores. The remaining 100 million to support the online channel. A few words on inventory management. The situation has been so difficult. 2 billion inventory, lockdown on stores, and the only possibility of generating sales in the online channel. But we are not planning very big sales offers. Our aim is still to maintain a healthy profit margins. So the second part of January, the standard period, will be devoted to sales offers. Now we encourage the customers to visit the stores and to buy online while maintaining the good profit margin and pricing policy. We do take into account that some of the stock from the collections for the spring and summer will be moved to the autumn collection. It's very difficult to say how large will be this part. The sales will start soon, and afterwards we will be able to say more about that. Importantly, orders for autumn and winter have been reduced by 40% in order to secure the financial standing of our company. Summing up the risks, targets and opportunities for this year, the big targets, the main is to, of course, maintain financial liquidity so that the company can survive in long term, so that it has funds for salaries, for meeting its liabilities and for paying for goods. We are doing our utmost to improve the situation. We're planning. However, it's very uncertain. The revenues fall shall not exceed 30% year-on-year. Gross margin It will be lower by 5-6 percentage points because of the sales offers and the high dollar exchange rate. On the left, you can see the whole list of risks that we have noted that cause this uncertainty as to the results for this year. First of all, what will be the model of customer behavior after COVID-19 pandemic? What traffic in stores will look like? What will people want to buy? Well, this is still an unknown factor. Another risk is the second wave of infections that might come. The changes in the economy are also uncertain. In the tourist industry, in the entertainment industry, everything is still under lockdown. It's still a lot of problems there. We know that the economy is combined vessels system. So in long term, the increase of unemployment, the possible increase in unemployment will also affect our customers' shopping habit, which will translate into sales, of course. Another big uncertainty relates to rentals and whether we will manage to negotiate the rental decreases. Another uncertainty. It's about selling the spring-summer collections. The high US dollar and euro FX. For us, Polish zloty is important, but ruble as well. We're trying to obtain external funding also. We're still waiting for some decisions of external institutions on this matter. When it comes to priorities, it's safe financing. I would like to stress that we are not planning issuance of new bonds or shares. We would like to survive this crisis based on bank credit lines. We've been using our credit lines to the maximum. We've asked the banks to increase the external financing. It seems that at the moment we will be able to increase the bank financing by 700 million zloty. Additionally, we have applied for the financial support to the government. We haven't received any response yet. So let me emphasize again, the target is to run the group through the difficult times with good financial liquidity, so as not to ask our shareholders to provide any capital. In the long term, we want to go back to normal also in financial terms. So our goal is to maintain a safe balance sheet and to return to development in the post-crisis time. We are prepared for the possible second infection wave. We want in the long term, we would like to be sure that we can function without any larger fluctuations because of the aid obtained. If the situation proves better than expected, we're also able to increase orders and to produce more clothing so as to also increase sales. But for the time being, it's so uncertain that we have to react on a day-to-day basis. And this flexibility of companies in our perspective is the key to success. To summarize, I would also like to tell you about our new next report. It's the non-financial one. It's an integrated report that is published by us today. I strongly recommend to visit our website and to have a look at this report. What is important in this report, we emphasize the 4 pillars of the CSR strategy. So the ecological production, ecological clothing, and also this chemical safety of production, decreasing the use of plastics in packaging and our products. And the 4th pillar, green buildings. So energy saving technology implemented in our stores, warehouses and offices. Thank you very much, ladies and gentlemen. Now let's start the Q&A session. We would like to answer your questions. I think the list is already prepared. We'll try to answer all of them. Let's start with the questions that we expected. So it's about rents. Could you update the process of renegotiation of rents? How much out of 400,000 meters will be able to have new contracts signed, on what terms, and how many stores, what area will be closed in Poland, and comparing it to abroad. In Poland, let's start here. This is the most difficult way of negotiations and the most comprehensive type of negotiations. On foreign markets, we've also been negotiating. We've been trying to negotiate rent levels. Many stores open in Poland are placed in the shopping malls which belong to international developer groups. So we have been engaging in discussions with them. It's really hard to say what the outcome will be. I shouldn't actually mention any progress in these negotiations. About 1/3 have already been negotiations, but 2/3 are still in ongoing negotiations, and the final effect is still uncertain. It's been tough negotiations, and both parties want to negotiate the best terms for themselves, but in forward-looking perspective, each party wants to have the fair terms. We're trying to be negotiating in fair manner. We do not want to have unprofitable stores. Of course, we understand the arguments of the other parties, and also in collaboration with banks, we're trying to negotiate satisfactory terms for all parties. How many of these stores will be able to have different changes, and it's very difficult for me to say. I wouldn't like to say. Let me just emphasize that there is a risk that not all of the stores will be reopened. Another question, it pertains to online sales. What's your capacity for online growth? The growth that you see now, 300, 400 or 500% year-on-year growth in some days, we're able to handle that. Our flexibility that we've been demonstrating over the few weeks that have passed, we've been doing a lot of projects that in normal conditions take months. This fast adaptation to new conditions, this rebuilding of logistics centers, streamlining process, remodeling of the key logistics center into the one that handles e-commerce, causes that we are able to handle 400, 500% growth. And it seems that in the longer perspective, this is not threatened in any way. Again, about online, will you have any extra expenditure in terms of online in the next budget? When it comes to online expenses, we consider advertisement costs to acquire new customers. This has been happening. We are spending the money, but in a very reasonable, well thought out manner. We are looking at the return on this investment. We see what is positive. A lot of new customers that used to buy online in traditional stores now move to the online channel and stay with us for longer. What is interesting, these customers, they transfer their offline customer habits into online. So the structure of online sale has also been shifted. We can see copying one-to-one copy of the habits from traditional to online stores. It also seems that when it comes to logistics perspective, what we can do, what we have done already, which is maintaining this organizational capacities. Our logistics center in Romania, Slovakia, Russia, they have been operating. We've been supporting that, but it will not be a lot of when it comes to cost. And they're variable. Another question pertains to the new customers when it comes to online sales. What % of online sales in April and May was generated by new customers, and how much was the increase in sales when it comes to the previous customers? I can't answer that. Mostly these are returning customers. The new customers are less than 40% for sure. Next question is about stress testing presented in the statement. In the base scenario, you assume reduction of the floor space by 30% by the end of June 2021 and a decrease in revenues by 30%. Without taking into considerations of the lockdowns, please comment. Stress test is a very important, and not only for us, but for other companies as well. We have been doing our internal tests, and Ernst & Young, the external auditor, to carry out stress tests. These were done with very conservative assumptions, up to 30% of possible store closures in Poland. Also in our scenario, when the sale is not returning to the level of from before COVID, and we have 70% of normal sales in stores. Given these assumptions, it seems that it's been difficult. We can face problems. Therefore, we applied for additional funding from banks. And as of today, thanks to the bank funding and the government crisis response policies, we are in a good position. We are keeping our fingers crossed for the stress test not to be so pessimistic. Another question also pertains to online sales. It's about comparing EBIT margin on online to the margins from the last year. We have been analyzing our online EBIT margins for March and April, and it seems they are higher. These margins, the EBIT margins, are higher year on year thanks to this good work on costs, and also thanks to the good work on higher margin. So margin at the level of the trade margin does not fall below 50%, which means that EBIT is higher by 1 or 2 percentage points higher than year on year. It was 11% for the last months. Another question pertains to information about the level of returns in e-commerce, whether this has changed in any way. In terms of percentage values, it's not changed. It's still 23, 25%. But of course, the volumes are increasing, so the statistics remains stable. Next question is, what can be expected in the coming year, taking into account the planned changes in the collections, or about the spring-summer collections? I think it was said what it will look like. On my part, I would like to mention that the trends will be varied. But first and foremost, there will not be so much fashion orientation. It will be more universal. And we would like to swiftly move from one season to another. The seasonality will not be so strictly visible. It also happens due to the warmer winter months. It already happened. Let me also say that April and May were, as usual, the period of increased demand for female collections. This is related to introduction of new collection and the Easter period and the First Communion in churches. But right now, what we've noted this year, there's been a considerable decrease in terms of demand for very formal collections, evening dresses. But on the other hand, there's increased demand for the knit models, and as Przemek mentioned before, so people focus on comfort, homeware, and spending time at home. We will also pay attention to pricing of our collections and ecological. Let's listen to the experts. The ladies are experts in this area. The next question. When it comes to termination of the contracts, do you have any any contractual penalties? Not at the moment. How do you assess the online growth compared to your competitors? We have been looking on the market, and it seems that the 300-500% level that we've been achieving are very high, and it's higher than the market level. Online in Russia, what about sales there and the dynamics? Are they similar to the whole group? They've been increasing in Russia. We have noted that also in Poland. After lockdown, in the beginning it was not so quickly increasing, but with following weeks, the dynamics was more visible. Now we see the acceleration of online. Triple increase has been observed, and the dynamics has been increasing as well. When it comes to the fall in sales, are you considering selling inventory online in later days? It's a good question. We've been considering this aspect. We've been talking to companies that run online platforms. We haven't made any decisions, so it's a no for now. Let me just add on my part, those of you who listened to Vistula and Vulchanka conference yesterday, you probably heard that there was an attempt to cooperate with Answer platform, but the findings were negative when it comes to this cooperation. Another question, what about the increase in online sales by brands? The highest dynamics is recorded in the Reserved Kids and Sinsay brands. Lower dynamics, which was also before the coronavirus pandemic, lowest dynamics were reported in Crop and Male Reserved. Some questions refer to what about the share of returns in compared to the previous quarters? Are you expecting the fall in returns in the following months? What we see is some kind of trend that people buying online, our customers, like to return the goods in the traditional stores, and this trend will probably be maintained for two reasons. This is convenient, and the sales network is large, so it's easy and convenient for the customer. So that will probably maintain. We need to negotiate good terms and conditions for the stores so that they can reopen and handle the returns. For us, it's the cheapest form to interact with the customer. So the pickup in store and return in store, we prefer to serve the customer in this way, also when it comes to online customer. Is there a risk into handling this demand online by courier companies? At the moment, we see that courier companies have also been increasing their capacities in terms of delivering their operational capacities. We don't see any problems in this area. What's the impact of the situation in Bangladesh and the US dollar on the sales and purchases? In Asia, We observed a lot of problems depending on the countries. First, the Chinese market was under lockdown, and after that, other production markets were closing. Till this day, Indian market is still closed. Slowly, it's coming back to normal on these markets. The situation is all the more difficult that a lot of companies from our industry started to decrease the orders because of the lower sales dynamics. The situation on production markets is, I would say, stable, but there are less orders. Are the prices influenced by dollars? Yes. We can negotiate better prices, but it's only a few percent decrease. The factories also try to adapt to the increased safety standards. They need to invest in the safety of their own people. Therefore, they need funding for their own internal investments. What about traffic in traditional stores? How many people buy at the moment in traditional stores? You have to differentiate bigger cities and smaller cities. In bigger cities, people very often buy online, so the traffic is less. It's 20-30% of what was before the pandemic. In smaller cities, they record more sales. It's about 60% of the normal traffic. It's worth mentioning still that the customers who do come to the stores, they buy, so the effectiveness is greater. There are not people who just walk around, but they simply buy the products. Is it possible for you to estimate in any way whether you get market share in e-commerce in Poland? We do not have such direct data, but it seems that whether we have several 100% degrees and other companies record double-digit or simply lower results, it seems that we as a company have been gaining a good position here, and the 300-400% growth is not outside Poland, but it's also in Poland. Poland also records 300-500% growth in sales. It's still the most important sales market for us. Is it possible for you to send directly from the store to the client? We've made some attempts in this area. We've been trying to work on that. It's promising. What may be the net debt at the end of the year? I cannot answer this because I cannot predict any financial results, and the second half, there are too many uncertainties. Do you consider investment in online platform like CCC in the shoe industry? 300-400 increase that we have been noting is sufficient for us to focus on. We are not considering any platforms right now. Do you observe any consolidation moves in the industry and takeovers? Are you participating in such projects? No, we are not participating in such projects, and we stick to our strategy. We do not get involved into some mergers and acquisitions. We focus on our organic growth. Whether we see increased activity in this area? Rather not. In this COVID situation, each player tries to focus on their own liquidity to survive and to maintain the continuity of all processes. We've had some takeovers, but it's abroad on American or UK market. It's not as universal. For the moment, everybody tries to survive the COVID pandemic. Another question about competitors. Do you see any interesting moves when it comes to Inditex or H&M? Are they surprising you with anything? In general, we do not comment on the strategies of our competitors, and we would like to stick to this rule. We will not answer this question. If online has become such an important channel of sales, are you considering more precise data in your quarterly or annual statements? Yes, definitely. Starting this year, 2020, where the quarters are shifted and we need to adapt the reporting to this situation with the COVID pandemic. And online, the share of online is so big, 100% of the turnover is online. We've been working on changing our reporting methodology, and you will hear the details soon. What salaries level are you expecting in 2020 and possible changes in terms of employment? We are not at the moment we're not expecting any changes. We want to simply run through these difficult times. We would like to believe that sales will go back to normal, maybe not 100% to what was normal before, but to 70% that is forecast in stress test. Then we can return with the normal levels of salaries and use the possibilities given by the government aid in order to be as flexible as possible in terms of adapting the salaries to the sales growth. It seems that this is all in terms of questions. Very well. Thank you very much for your attention, ladies and gentlemen. And we'll see you soon in a month's time. Thank you very much for your attention. Thank you for listening to the streamline. Time runs fast. We've been moving this results conference. It was supposed to be last month, but in a month's time there is another one scheduled, this time pertaining to the results of the first quarter of 2020. Stay healthy and see you on the next conference. Thank you. Thank you.